Datadog just delivered outstanding quarterly results. So we're going to get into the numbers, we're going to get into the business, and we're going to get into whether I am buying or selling the stock. So make sure you stay to the end. So as a result of these results, which were released this morning, the stock exploded 5.5%. You can see right here, just exploded. So must be good results, right? So let's get into it. So first off, what is Datadog? What Datadog is they are an observability system for cloud-based networks. Someday I'll get that word right. So yeah, see it all in one place. You can just get this off of their website. So basically they work on any major cloud provider. So you got AWS, you've got Azure, you've got Google Cloud, and as you can see, pretty much all of the others. So what they do is they provide basically, number one, a series of things. Number one, and I think is one of the more important ones, is system uptime and system downtime observability. So as you can see here, it actually they represent your network, because what happens is when your network is on the cloud, it's a whole series of things connected together as nodes. So you got all these different nodes. You have the database, you've got your website, you've got your backend API, you've got all these other nodes, and they're all connect. For example, the backend API talks to your database, the website talks to your backend API, so there's nodes that connect between each other. And what happens is, for example, if your database goes down, the API is going to go down, the website's going to go down, and all these other services are going to go down as well. So what happens is, the best way to observe this is to build a graph, as you can see here. So you got the graph right here that you can see on the system, and you can see each node is one of those circles, and you can see there's arrows between those circles, and you can see the red one right there. So the red one went down, and it's going to affect the other ones as well. So what happens is, when a system goes down, you'll see that one red one turn red, and then all the other ones will turn red, then the ones that it depends on will turn red, and you'll be able to isolate exactly where the problem is quickly. And that's the thing, is when you have these types of issues, the faster you fix the issue, the better, because this is impacting your customers. So you need to be able to respond quickly and get the system back up and running very fast. But that's just one way to do it. It's going to shoot off emails to you. There's all sorts of layers of observability beyond just this graph. There's dashboards. You can see it here. Get full visibility into modern applications. Monitor, troubleshoot, and optimize application performance. And also, that's the other thing, is it monitors performance, not just downtime, but say your database is running slow. It's going to tell you it's running slow based off of the metrics that you provide. You can say if you're going 25% CPU power, send an alert. Over 75%, 90%, whatever. You set your metrics, you set your percentages on when to alert you. So you trace requests from end to end across distributed systems. So that's the cloud, is distributed systems. You can have up to thousands of nodes that depend on each other. So that's why you need something like this to monitor it. Track app performance with auto-generated service overviews, graph and alert on error rates or latency percentiles, 95%, 99%. Instrument your code using open source tracing libraries. So the other thing is, it also analyzes and explores log data in context. Because you might be wondering, can't the cloud providers do this for you? And the answer is yes, to a degree. For example, AWS has a feature called CloudWatch. That's their observability system. And there's also CloudWatch metrics and CloudWatch insights and things like that. And they also have other things called X-Ray, which is services connected together, but it's a little bit different, and it's not as in-depth as Datadog. The service is not as good as Datadog, because this is Datadog's bread and butter. They make it good. They make it really good. So this is a must-have for any cloud customer. Well, this or something similar. But Datadog's, the top dog, so to speak. So yeah, you can quickly search, filter, and analyze your logs for troubleshooting and open-ended exploration of your data. Automatically collect logs from all your services, seamlessly navigate between logs. So the thing is, everything's sort of interconnected. So that's why you need to be able to bounce around and see things as a whole, as a whole system is that you got thousands of microservices talking to each other. So it can be difficult to pinpoint a bug. And that's why you need these tools to help you pinpoint those bugs for you, because it can be difficult. It can be difficult with thousands of microservices running around, logging data and everything like that. So you can also monitor your user experience. So for example, when a user hits your landing page, you can see right there the amount of time spent on each page. So this will help you monetize your system better. So you can sort of pinpoint issues possibly on your page, saying, hey, they're clicking off this page. They spend 2 seconds and they click off. There's something wrong with this page. Maybe it's the layout's bad or something else. Something needs to be addressed. So that's one thing. Correlate front-end performance with business impact. So you got all these dashboards, which are really nice. Everybody loves the dashboard. So you got the page views, median load time end, P90 load time end. So also when the website is running slow, you'll see that here as well. So 11.972 seconds is a pretty slow load for that customer. Visualize traffic flow in cloud-native environments. Pretty self-explanatory, I would say. This is just data transferring back and forth, by the way. So actually, this is AWS, transferring data back and forth. These are AWS zones. That's how I recognized it. Build real-time interactive dashboards. Again, everybody loves a dashboard. Sharing, alerted on critical issues. That's kind of bar none. Also, they got API access. So you can log into it through code into the API and pull data that way. So it's a really useful tool and it's really cool. And it's being monetized. And let's go on. Let's see what was expected. So Datadog earned more profit than expected in the second quarter, but the software company's financial projections for the current quarter missed the mark. Datadog helps clients detect and analyze malicious activity in real time. It reported an adjusted profit of 43 cents a share for the 3 months through June. Quarterly revenue grew 27%. That's a growth above the cloud growth. Cloud's growing at about 20-ish%, like 21, 22% on average. So 27% is growing faster than the rest of the cloud, which is good. To $645 million, while the consensus call was for $625 million. And projections are $660 million, $664 million. Didn't meet expectations of $665 million. Honestly, that's such a small miss. Who cares? Who the fuck cares? I don't. Sorry for swearing. This is a family-friendly channel, right? Okay, so anyway, Datadog has a trailing PE of 317, which is really high, but a forward PE of 63. So people are expecting growth and the bottom line to grow substantially. So actually getting into that, why is it such a substantial difference? Is actually this right here. If you look at the financials, it's this right here actually. So Datadog was unprofitable in the 2020 range and also the 2021 range. They turned profitable in 2022 and then became unprofitable towards the end of 2022 and the beginning of 2023, and they're now profitable again. So that's why you're seeing this huge PE differential, trailing PE versus future PE, is because they have this period of extreme unprofitability right here. So anyway, let's get into the report itself. So yeah, second quarter grew a great 27%. They have a strong growth of large customers with 3,300 customers with an average annual revenue of $100,000 plus. So these are big customers. That's up from 2,990 customers a year ago. They also announced general availability of LLM observability. So if you got an LLM, you can also observe that performance as well. Announced innovations for generative AI, observability, cloud security, product analysis, software delivery, and cloud management at Dash 2024. Okay, so let's get into it. So yeah, GAAP operating income was $13 million. GAAP operating margin is 2%. So that's it's going to be getting better. That's really small right now, but it's improving, and they're going to get much more profitable really soon because the cloud is growing exponentially. Non-GAAP operating income was $158 million. Non-GAAP operating margin is 24%. So yeah, the difference between these two is like stock-based compensation. So again, this 2% is going to grow substantially once it gets beyond this SBC differential between non-GAAP and GAAP, the reconciliation. GAAP net income per diluted share was 12 cents, non-GAAP 43 cents. Operating cash flow was $164 million. Free cash flow $144 million. So these are all good numbers. Cash and marketable equivalents, $3 billion. Okay, so we went over that and just junk. Outlook, we just read that. Okay, so how much debt do they have? And actually, I marked that already. So what happens is Datadog has debt that's sort of been converted from long-term debt into short-term debt. So this $743 million is going to have to be dealt with soon. They could pay it off in cash or securities right now if they wanted to. They had $3 billion in cash, but that's up to them. They'll either pay it off or they're going to roll over into new debt. So that's a small amount of debt compared to the cash they have. So this company's balance sheet is strong. This is a strong balance sheet. And the earnings report also is strong. These are great earnings. 20-something% revenue growth. And we mentioned all the earnings before. So the report is strong. The report is really strong. Anything else? No. Okay, so the question now becomes, what do I want to do with Datadog? Now, there's a couple things to look at with Datadog. Number one is the analyst expectations. So for Datadog, there's 25 strong buys, 10 buys, 6 holds, and 1 strong sell. I wonder who that is. Probably Gordon Johnson. No, I'm kidding. So yeah, Wall Street rates Datadog a buy. And as you can see here, the average upside is 26.27%, which is really nice. Really nice upside potential. But again, this is the analysts. This is what the analysts think. So that all looks really good. And as we can see here for the charts look good as well. Again, the company was unprofitable and is now profitable again, and the profits are going to grow substantially. Remember, the earnings per share was the GAAP earnings per share was only 2 cents. That's going to grow substantially next year. Going into later this year and next year, it's going to grow substantially. More than 2 cents, because you're going from zero, you're going from negative to positive, so it's going to grow a lot. The earnings per share is growing really good as well. Net income $40 million. Well, again, this is the first quarter. This is last quarter, so this is not the latest earnings. This is the previous earnings. So I love the cash flow. This is excellent. This is excellent cash flow improvement over the years. Excellent. So yeah, the company is performing great. This is great as well. This is the exponential curve for the balance sheet. Assets, that is exponential. Excellent. So yeah, the company is growing great. Top line's growing great. The bottom line's growing great. The expectations are good. The question is now, is it a buy or is it not a buy? I'm sort of torn. The company's performing well. The management team is great. The forward PE, however, is 63.69. So for me, it's a little bit expensive. Now, if somebody else wants to buy the shares, I'm not going to bat an eye. Have fun. But for me, it's a little bit on the pricey side. For a growth stock, I'm looking more towards like a forward PE. If you're growing 25%, I'm looking at more of a forward PE of like the 40s range is what I'm expecting there. So I think their forward PE is a little bit high considering their growth trajectory. However, the forward PE is going to grow a lot shorter soon. As I mentioned, they're newly profitable, so that's going to decline fast. But for me, I'm on the sidelines for now. This is on my watch list. I'm going to keep a close eye on them, and I'll keep you updated. If I do make a move on Datadog, I'll let you know. Actually, check me out on my Patreon. I'll let them know first. So yeah, don't forget to like and subscribe. Thank you for watching, and I'll see you in the next one.